liquidity has been done, and now it's more about the open high close and the low open low close high, right? So it's mostly open high low close, or open low close high close, sorry. So this is for bullish, this is for bearish, this is for bullish, right? So the idea is just the market opens, accumulates, manipulates, and yeah. So this is basically the idea, right? Now this is what a classic day might look like. You know, the accumulation phase right here, the manipulation, and the distribution. So in this one candle daily range, this is the daily range, but it can also be visualized into a weekly using the day of the week, right? I'm gonna talk about it with time. So at a specific time of the day, we expect the low or high of the day to come in, right? You can, turn this around. That's a bearish, that's, but this is an open. Let me make it here. Where's my brush? So this is an open. This is high. This is low, and this is close. Yeah. So this open, high, low, and close, right? So this is a typical bearish candle. This is the way a bearish candle looks on the lower time frame, right? So the aim right here is this: we want to be able to catch one of this. So it's either we catch the high, which is after manipulation, taking a previous day high or an Asian high most of the times, and then we create the high of the day. Is that we catch this is a trade setup number one. This is number one trade setup. Or we catch the New York OTE, which is number two. Or we catch the low, then take it back to the range. My bad. So there are more like three opportunities, three setups for you daily. All right. So you want to see price at the open kick into a previous day high or a key level, right? Yeah, and this also of a key level to close the day. Yeah. So you want to see price after accumulating, distribute, that's manipulate, sorry, into a key level, right? Most of the time, listen closely, folks. most of the time. This is between 2 a.m. to 5 a.m. This is where your kill zone time comes from. So this is between 2 a.m. to 5 a.m. That's most of what's happened most of the time, right? And this is New York OTE, a New York session, retracement, and then we continue to the downside, right? So time and price. I'm gonna tell you guys the specific time of the day when you can go into your setups, your charts, and you likely gonna see setups forming with this ideology, right? So the high was taken into a key level and we flush. This alone is enough, right? You catch the high and then you ride it back to the 50% or back to the range low right here. That's enough. If you could catch one of this, one, two, three, if you could catch one of them, you are good to go. You don't need to catch all of them, right? Now, let's talk about something right here. This move right here, you can notice I didn't draw it straight to that key level, right? Most of the time, listen, when the market is getting close to key level, it has a very, very strong pullback, a deep pullback. And from that deep pullback, it sucks in every single person that sold from here and then go into the key level. You have to practice this to see this happen many times. So open, accumulation, manipulation, and then distribution, right? So you have one, two, three to find and catch a setup, right? Right. So let's look at the chart and see this in real time. I'm gonna use this candle right here. Any of these candle can actually be used. Most of them have that. Well, let me use this guy right here. It seems to have exactly the. Now it's not gonna be bed of roses every day, right? So you have to be prepared. Now the true day opening is the midnight opening by midnight. But the midnight opening New York time. Sorry, that's the real day opening, right? So let's take it to this Wednesday, Thursday, right? And then we have 7 o'clock, which is when the market closes, right? I don't know if I'm correct, but okay. Oh, no, this can't do, man. Let's let's have it here. So um, this is the through the opening right here, right? So price opened here at midnight, New York, at 103.654, right? We had a previous day low right here, right? I have a previous day high right here. The market took out that high, rejected back into the range, right? It's normal to see this kind of stuff on an NFP day, right? But then the idea is still accumulation, manipulation, and distribution. So this was the range, and this is also a tiny range inside of it. This whole thing right here is a range. Okay, then you have a manipulation away from that range, and then we close back into the range, right? So what's this? A fair value gap. Not you write that down. This is the way you go about your setup, your narrative behind the setup. So now you have a 4-hour fair value gap, right? And you have liquidity right here, well, also called Asian range. So if your idea is to buy below the opening price, that literally means that you're looking for price to drive into that 4-hour fair value gap and take out liquidity. You want to see close back into the range and you want to be a buyer from there, right? And boom. So now you might not have seen or caught any OTE. Why? Because this move started by New York, right? And New York is already half of the day when we open New York session. Understand? So it's always, more fun when you catch the when the low of the day or the high of the day comes in London, and then the New York is for protraction or retracement, right? So that's it. You have to backtest this, folks. You have to backtest it for it to work for you. I will search for a day that seems to have written in order. Okay. Okay. Speaking about this, sorry. Looking for just one single settle. Okay. Now, nice. Let's come to this day right here. This was on Wednesday, right? On Wednesday, and this was the close, right? So on Wednesday, let's go into the 15 minutes to study it real. So on Wednesday, we had this accumulation right here from the Asian section, right? Yeah, this whole accumulation right here from the Asian section, and we had this old high right here. You see, we manipulated to create, right? From the high of the day, what time is this? 4 o'clock, right? London, 4 a.m. New York time. That's London section, right? So we took it out, and let's just check if we, yep, that's if our BPR right there, or you can literally call it an inversion. This is an inverted fair value gap. Well, I just love the word BPR, so I just, yeah. So we took out the high into an inversion, inverted fair value gap. That's the classic support turned to resistance. So into that, we created the high of the day at 4 a.m., right? And we flushed down into the low of this range, which I said can be your model. Only from this to this is enough for you, right? And then we took it out, we accumulated again ahead of New York. We manipulated into that and took out the high of that range before New York. OTE, New York OTE, and the close right here. So let's check how this price right here closed and where it closed, right? Now coming to this, notice how this guy or this low took out this low into an order block, or just call it a key level. when it bounces off that key level and low close. Now, this is the classic day, right? You either have caught this, sorry. So you have either caught this or this or this. So one, two, three. Turtle soup forming the high of the day. Could have used this order block as your entry technique. Sorry. Yeah, turtle soup into this and OTE and the low close, right? Of the low. And so this could be your whole model, right? So um that's it. That's how you frame your idea with the open high, low close, or open low, high close, right? And at certain time of the day, you're going there to find one of these three setups, either the total soup forming the high of the day or the low of the day of the reverse of this example, or the OTE, New York OTE or protraction, or you're catching the low into the close, right? So the next is, how you do enter and your 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 stop loss placement, which is very, very important, right? So let's get it.